Compared to the last week, the market had a relatively quiet week, and while the indexes were down, there was plenty of constructive action that took place. Keep watching, we'll go over what happened, where I think the market might be going, and of course, a couple of stocks that should be on your radar. What's up everyone, it's Brandon from Amphibian Trading, and let's get right into it. So the indexes were down for the week, however, volume was light, and overall this was healthy action as the indexes are still digesting the prior week's 8% gain and letting the moving averages catch up. If we look at the NASDAQ, the structure of the chart actually improved and we now have a higher high and a higher low. On top of that, we're managing to stay above the 21 exponential moving average, which has been pretty big resistance throughout this whole bear market. You can see just how many times we've been rejected there. And now the 21 exponential moving average has also crossed above the 50-day moving average. So that is a lot of positive action there. If we switch over to the S&P 500, you can see the same thing with a higher high and a higher low. Now, with the S&P, we're stuck right in between two major levels. We have the 50% retracement from this last leg down that we bounced from on Thursday, and then we have the 618 retracement overhead, and that level also lines up pretty closely with that 4,000 psychological level. So the bulls are going to be looking for a move above that 618 retracement and the 4,000 level, while the bears want to break that 50% retracement to the downside. Let's go ahead now and look at the dollar. This continues to move lower, which is good news for the bulls. It also looks like it could be forming a bear flag here, and I still think this goes and tests that 200-day moving average, which is below the level we're at now. So at this point, I'm actually pretty bullish on the market to continue rallying from here. How far the rally is going to go, I don't know. Is it going to go to the 200-day moving average, or is this the start of a new bull market? At this point, no one knows, but we do have some tailwinds from the CPI and the PPI reports coming in well below expectations. We're past the midterm elections, seasonality, and there's a lot of bearish sentiment out there still. If we pull up the AAII sentiment survey, this week, 40.2% of the participants were bearish. So that's well above the 31% historical average that we've seen, and also well above the 33.5% of participants that were bullish. From a technical perspective, I can also see further upside. If we go back to the S&P 500 and look at the previous rally attempt that took place from June to August, the S&P rallied about 19% before coming down and making new lows for the year. Now, during that time, we saw many stocks like Air Test Systems, Celsius, Enphase, Impinj, and Transmedics Group, just to name a few, make massive moves of close to 100% or even more. But the difference between now and then is that when these stocks made those major moves, they didn't come from proper bases. If you look now, while the market's been correcting and making that new low, there's been lots of stocks like these ones that did form proper bases. Some of them are still forming bases, like Celsius, while others like Impinj and Air Test Systems have already broken out. So I think this sets the stage for a nice rally into the end of the year. Let's go ahead now and take a look at some of the stocks I think that could help this rally attempt. Okay, first up is Celsius Holdings, CELH. So just like we talked about in the previous section, this one had a very nice move coming from the bottom here in that June to August rally period. So this one went on, it made a new high, and then now we've gone on and we're forming a cup base. Generally speaking, the volume has been well below average in this base, and last week, as we pushed back above this 10-week moving average, which is the red line here, we had volume come back in, and it was the heaviest volume of the base. So that's a good sign. You want to see heavy buying volume as that right side builds. This week, we showed some relative strength. This finished up the week almost 4% while the indexes were down. We also had slightly above average volume as well there. So the weekly chart on this is looking very constructive. If we flip over to the daily chart, you can see we're trading in this downward sloping channel. If this can push above this trend line, that would be very positive. It can come up and maybe put in a handle for this base before it takes out this previous high of 118.19. So this one, I'm just looking to come up and continue forming the right side of this base as it pushes through the trend line. Next up is Enphase, ENPH. So another one I mentioned earlier, had that very nice move in the previous rally attempt and now has formed this cup with handle base. You can see the volume down here on the right side again coming in. So that's what you want to see. The volume in this handle week was also very light. Very nice weekly chart. Going over to the daily chart, here's that same cup with handle base. We had this earnings gap, we came up and then pulled in, and that created our handle. Now, the standard pivot here from the weekly chart would be this 316.87 high. However, if you look at this level here that I have drawn in, it's right at around $313. This seems to be where supply is coming to market. You can see every time we get above that line, we sell back down. Here, we rallied right into the line, came back down. The next day, we tried to push above it again. We sold below it. Ran into it a couple more times here, and then even on Friday, we tried to push above it, yet we sold off, and we ended up closing right below that line. So this one, I think, if it can get above that 313 level, wear out that seller, it should be ready to move higher. Next up is Global Foundries, GFS. This one is a young IPO, and it's finally formed its first proper base. During that last rally attempt, you can see that this moved up very nicely, and look at the volume come in showing massive accumulation. We had 7 weeks up in a row, and the volume picked up continuously. As we built this base, volume was also very low here. And again, volume's coming back in on this right side, showing buyers. See some big blue bars there. And then this week, we pushed above this left-hand side high on slightly above average volume. Not overwhelming, but it was above average, so I like the action there. If we go into the daily chart, here's that same structure. Again, you can see nice volume patterns here, big green bars. So here's that left-hand side high. We pushed above that. We're still above it. I'm going to be watching this one to come back down, pull in a little bit, and maybe test this 21 EMA. All right, next up, Mercado Libre, MELI. This one, again, had about an 82% rally during that June to August period, and it's gone on and formed a cup with handle base. Looking at the volume pattern down here, again, we see blue skyscrapers, lots of accumulation throughout that base. We formed a handle this week, which was a pretty tight close on the weekly, and volume was below average. So it's forming a very nice, proper cup with handle base here. Looking at the daily chart, here's that same structure. Your standard pivot would be above this high here of 1,039.39 cents. However, I'll be looking to get in before that if I can get a low risk entry like a kicker pattern or something like that. You can see we actually had a kicker pattern on Friday. However, I didn't take that one as I was happy with my current exposure, but I'll be watching this one for another low risk entry. Okay, last up for today is TMDX Transmedics Group. Once again, this one had a very nice rally during that June to August period, and now it's gone on and formed a nice cup base with some tight closes in it. Volume really dried up and then pushed higher again as we came up this right-hand side. So we have 3 weeks here closing right near that pivot point. If we go into the daily chart, here's that same cup, nice earnings gap here, and now we're just staying right around this 56.41 level. So this could be viable here. However, this is another one I'll be watching if it can come back in a little bit, maybe test the 21 EMA. However, this could gap up and form a kicker on Monday, and it could just go. It's been consolidating nicely. Very strong overall action here. So this one should definitely be on our radar. Okay, so there's a couple ideas and some stocks that I think could lead this next rally leg higher. Make sure you're prepared. The rally could fail. However, I laid out my reasoning as why I think we move higher into the end of the year. Thank you for watching, and if you enjoyed this video or found any of the information useful, please go ahead and hit that like and subscribe button to stay up to date with all my latest videos.